We have Samir Joshipura, who's Group CEO, Sintex Plastics, joining us on the show right now. Samir, great to have you on the show. Thanks very much for taking out the time. There's been a decline across key parameters. Let's first talk about the custom molding business, which after showing some stability in revenues in the last 2 quarters, has once again degrown. What's been the reason for the same?
Well, in the custom molding, there have been two factors which has impacted us. One is a part of custom molding comes from auto industry in India, as well as auto industry in Europe. This is a significant chunk. And Indian auto industry has been showing decline due to liquidity squeeze in the market. Even in Europe, the auto industry is going through a downturn, mainly because of the new emission norms which are kicking in 3 months from now. So this has been the major reason. Yes, for our plastics business, which is consumer focused, we have been impacted by liquidity squeeze a bit, mainly because some of the real estate and the building material industry has taken a hit because of the availability of credit from the market. So that has been the impact. In our overall longer term, we continue to remain bullish in this custom molding segment, and we would continue with the growth that we have been projecting.
Good to know, Mr. Joshipura. Hi there. Good morning. Avan joining in. Let's also talk about the mix between retail and institutional sales. I understand now that you're focusing on kickstarting the retail business once again via the Sintex brand.
Well, Sintex has been doing retail, so it's not restarting, but yes, we have been significantly focusing on since last 2-3 quarters on this. We have done a lot of changes internally. In fact, it's a transformation journey. We call it internally Project Udan, and that's where we are very aggressive. We have hired an advisor, external advisor, a very reputed one for this journey, and we see that this business should be multifold 4 to 5 times in next 5 to 6 years.
Okay, what about the slowdown in the auto space? We've witnessed that over the last 3 months. What is your exposure there? Have you felt any impact?
Yes, in both Indian auto and European auto, we are present in both the markets significantly. So Indian auto numbers are down by almost 8% last quarter, and which has impacted us. We are the supplier to the OEMs. In Europe, new emission norm is kicking in, so because of which the auto sales is down by almost 9%, OEM sales is down by 9%, so we are also impacted there. So there is an impact there which has impacted us.
So do you see this, a prolonged weakness in Europe, as you spoke of, as well as back home, continuing to impact the overall portfolio? How much of a concern is it for you?
So European business should come in because it's not a cyclical downturn. It's just an emission norm, a milestone. If once we cross that milestone, it should be back as usual. In Indian auto, yes, I mean it is linked to the factors which are playing in Indian economy right now, and with that it should come back. So long-term growth is assured. Having said that, we have a significant non-auto business in India as well, and we are very bullish about it. As I just mentioned, we are looking at multifold growth in this business, and hopefully that should cover up for whatever little downturn we see because of, or weakness we see because of the auto numbers.
Okay. Give us your sense on how you're going to be looking at margin maintenance going forward. You have seen some compression in margins. Is this because you've moved away from government orders which were high margin in nature?
Not really. In fact, we are moving away from government business because both it's a stretch on the margin as well as stretch on the cash flow. The margin, if we just analyze our P&L, we have been, as I mentioned, we have been going through some sort of internal transformation very recently. We have invested very heavily in building competencies, building systems, building our networks, building the teams. and launching new products. So now we are a complete range of products in the segments we are in. Marketing expenses related to this. So some of these expenses have kicked in. Obviously, these are futuristic expenses, and this should result give us returns going forward. So I think margin we should be able to maintain. In fact, we should be able to improve rather than just maintaining it. So margin pressure this quarter we are seeing a little lesser margin is mainly because of the revenue challenge that we have seen, and we just discussed about it.